To start 2025, I rated Uber as the best stock to buy for the year. I also rated Tesla stock as a sell. As of this recording, Tesla shares are down over 27% year to date in 2025, while Uber shares are up over 60%. Now, it's too early to say I told you so and to celebrate on the outperformance of Uber shares versus Tesla shares, but I think so far year to date, we've seen a lot of the reasons why Uber made sense as a great investment, while Tesla's overvalued shares made sense not to own. I'm going to talk in greater detail about why this has happened, why I rated these stocks the way I did to start 2025, and how I feel about these two stocks right now after the share performance has diverted so significantly. Do I feel any differently? So let's get into the details.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So let's start with Tesla. And one of the only reasons why I rated Tesla stock as a sell to begin 2025, I eventually took Tesla off the sell list around April, I want to say, when the valuation crashed by roughly 40-50%. I took it off the sell rating, and now I have Tesla stock rated as a hold. So I have changed my Tesla stock rating since the beginning of the year. But one of the only reasons why I rated Tesla stock as a sell was because of the ridiculous overvaluation. To begin 2025, Tesla stock was trading at a forward price to earnings of over 200. That was on the back of the enthusiasm of Elon Musk's relationship with President Donald Trump. Investors felt like it was one of those situations where it was I scratch your back, you scratch mine. Elon Musk had contributed roughly $300 million to President Trump's campaign. And the thinking was that President Donald Trump would return the favor, granting Elon Musk and his businesses favors that would help investors. And fast forward to today, so far that hasn't turned out to be the case. In fact, in the most recent legislation, the huge tax bill and spending cut bill that just passed the House and the Senate, there was elements in there that were hugely detrimental to Tesla stock investors, most notably the $7,500 tax credit that purchasers of EVs were getting in the United States will no longer be in place after September. So that's going to be a big negative for Tesla stock and Tesla stock investors, even though Tesla stock investors will say that, we're not investing in the company for EV sales, we're investing in the company for AI and robotics. Still, the company needs to sell cars so that it can generate cash flow, so that it can invest in the technology to develop artificial intelligence and robotics. It doesn't have those technologies today. That's less than 1% of its revenue and profitability right now. And so, with the decrease of those tax credits, Tesla sales are going to be significantly under pressure. And already for the first half of 2025, Tesla's car sales are down in the double digits, right? 13% in the first quarter, 14% in the second quarter. So the business is going backwards, and yet the valuation is absolutely extreme. Even today, it's trading at a forward price to earnings of 143, as you can see here. So that's really my only gripe with Tesla is the valuation. If Tesla was trading at a forward price to earnings ratio that was more reasonable, I would not be rating Tesla stock as a sell. I would be more enthusiastic about Tesla's long-term prospects from an investor point of view. But at these valuations, it's as if investors have already acknowledged and believe 100% that the company will develop driverless cars and robotics, and they will turn into multi-hundred-billion-dollar revenue and profit generating streams. When that isn't yet the case, and there's still a lot of uncertainty surrounding, okay, let's say that you are going to develop driverless cars, and that's a certainty. You're going to do that within the next 2 years, and you're going to have these robo taxis on the road. Let's say, okay, that's going to happen, but there's still uncertainty regarding how much revenue and how much profit that's going to generate, right? Who's going to be paying for those robo-taxi rides to generate hundreds of billions of dollars in revenue. Will people want to get into these robo-taxis? That remains a question mark. Waymo and other driverless car companies already have a foothold in the market, and they're making huge leaps and bounds. They're lowering the cost of production of their more advanced, more safety uh, enriched systems. And Tesla is still in the early stages of testing their technology. So a lot of question marks remain surrounding Tesla. Um, the valuation of the company is, I feel, too uncorrelated with the company's fundamentals, and investors have gotten a little too ahead in terms of pricing in today what they expect the company will achieve 5 years later, 10 years later, 20 years later. They're already paying that price for the stock today. Meanwhile, Uber is generating consistent growth. The business model remains excellent and continues to improve. The recent developments in increases in tariffs are going to make the cost of car ownership even higher than they already are, especially in the United States, Uber's primary market, which makes Uber even more convenient as a transportation option, as an option to have food delivered to your home. And so people are going to be switching to Uber for more of their needs and using personal transportation even less now that the cost of car ownership is increasing. And you saw that today with the broader stock market was down roughly 1% as a result of President Donald Trump sending out these letters increasing tariffs on the United States trading partners. Tesla stock was down 7% today, and Uber stock was up more than 3%. As more and more investors, I believe, are starting to acknowledge the fact that Uber's business is thriving and Tesla stock investors are bidding up the company. But in terms of tangible progress on the robotaxi, it was underwhelming, right? That was the big concern I had about Uber stock this year was the robotaxi testing that started in Texas um, earlier in June. And so far, the results from those tests were underwhelming, right? It was a highly geofenced area, and Tesla had been preparing for that test for several months, collecting data, practicing and practicing for several months, and still the results were underwhelming. The cars were making huge mistakes. The invitations were only sent out to Tesla cheerleaders, and they weren't sent out to analysts and other news publications that Tesla feared might actually give an objective review of the technology. They rolled it out to cheerleaders who will just hype it up regardless if the technology was good or not. And they would edit out any parts of the video that were not positive. All of that hype didn't turn out to be very much. It was yet another nothing burger from Tesla. And so, given that and the additional turmoil with Elon Musk announcing that he will be launching a new political party, again, spending more time on politics and more time, of course, that will be taken away from Tesla time. And so investors are starting to question whether or not they want to own Tesla stock. Now, I still believe Tesla will be one of the most popular investments. Retail investors are very attracted to Tesla, regardless of all of the overpromises and underdeliveries. Retail investors remain committed with Tesla stock. And that's the one positive I will say. The one reason to own Tesla stock is, I believe, Elon Musk's superior ability to market the company to investors. The marketing knowledge and the marketing genius of this company is unmatched. To earn this kind of a valuation on a company with sales falling by double digits, profits falling by 30-40%, and facing all kinds of headwinds, to be able to retain and hold this kind of valuation speaks directly to how good the company is at marketing to investors. That's directly related to how good they are at marketing to investors. Any other company with these kinds of fundamentals would trade at a fraction of the valuation. but Tesla's trading at 3 or 4 times the valuation of companies with similar characteristics and similar fundamentals. So that's the one good reason about Tesla stock is you can rely on the CEO's ability to market to investors, to keep investors engaged with the company, and to keep the stock price from falling too significantly because he can find a strategy, a scheme to lift the stock price higher during times of turmoil like the company is experiencing right now. And so when the company does eventually launch new products that generate revenue growth and profit growth, after all, I do forecast Tesla's free cash flow will grow roughly 20x over the next decade. That's my own forecast, right? I forecast its free cash flow will grow from around $5 billion in 2025 up close to $100 billion in 2035. So those are my own forecasts. And I'm not as optimistic about Tesla stock as some others like Kathy would. But I still, even with my less than optimistic forecast, I still forecast a 20x increase in free cash flow. So they will eventually launch the robo taxi that will generate growth in revenue and cash flow. However, I think that's more than priced into the valuation. So looking ahead, do I think that this performance will change? I think so. I think Tesla will find a way to gain investor enthusiasm again. And I think the huge declines in share price won't continue. I don't think in the second half of 2025, the shares will fall by another 27% or another 20%. But I also don't think that the shares are worth owning at these valuations. Meanwhile, I still like Uber stock. I still have it rated as the best stock to buy, and I like its prospects even more now that the tariffs are looking like they will be in place and tariffs will be higher and the cost of car ownership will be higher in the United States, attracting more users to the Uber platform. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.